Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Good morning, everybody. That's Larry's line. He loves it, and it's my pleasure to be joining you in this great programming. I love that music. And good morning, Basil Chapman. Maybe we have Basil with us. I believe we do.
Yes.
Hello. Good morning, Basil. How are you?
Good morning, and how are you?
Good. How about that? How about that music? Right. I totally even forgot we were covering Trade What You See this morning. We got that beautiful Trading Places music, and it's a lovely way to start off the day.
In my former life as a professional musician, I used to conduct that Mozart overture very often.
It's a great piece of music. It did. It put me in a good mood to start that thing, and I thought of that line that Larry rolls off, of course, and it's a great movie that we're talking about Trading Places, and let's just dive into the market. We get the Dow up 70, S&P up 6. You have oil down slightly, and it looks like they're breaking news, Basil, right? That there's going to be, not breaking, but as in OPEC, of course, is meeting. They're going to extend their oil cuts for 9 months, it looks like, to end the global gut. They're talking about, I'm seeing headlines coming across, and we'll see how that kind of reacts to oil. But we've had some volatility, and it looks like overnight, as in about 4 o'clock this morning, we're as high as 52, and now we're trading down at 50.70.
Well, what's very interesting, I remember maybe it was 2 years, 3 years ago, a little hard to recall the exact time.
Time does
but
fly.
I do remember that in crude oil, there was discussion about the Saudis, and that someone had written a really interesting report, and in the report it said that the Saudis were able to go 2 years or even more than 2 years with all the reserves that they have to keep the price, to do anything they wanted with the price. And
Sure.
If they wanted to keep it low, they could do that without a problem. I'm just wondering if crude oil, not in the hundreds, but in the 50s at half the price, whether or not the dynamics with the spending that's gone on, just the infrastructure, et cetera, really puts them into that situation. I got a feeling that perhaps they aren't quite as leveraged to their own means at
Sure.
this time as they used to be. And
Sure.
we'll see. I mean, this is something you don't actually get to find out because it's all inner circle. So
yes, no, I agree. And of course, beyond that, just in terms of the control that OPEC has in terms of how much production the U.S. goes through, I mean, Andy Heck does a great job fundamentally breaking down just the core, pure supply that comes outside of OPEC now compared to the control they had at one point with controlling so much of the supply.
And this recent run-up, and this is what I was saying to on my show yesterday at my Tiger Technicians Hour at 11 o'clock, what I was saying is that there's a leg D on the upside. Let me just explain for anyone looking at the charts what I've got here. I'll show you that from the lowest, most identifiable low bar in the Chapman wave methodology, what you want to do is to count each successively higher peak. When you get to the fourth highest peak, and I alphabetize them, uppercase A, B, C, D, E, F, and even G on the upside. Same thing on the downside, except it's usually lowercase. But when you get to that fourth highest peak, other things can happen. This is the experience that I've had over the many years I've done this using the Chapman wave methodology. Now I'll move this to the side, and I'll show you where we are. We made a doji candle yesterday, and what I said is if we close above the candle, it means one thing, but the 52.17 200-period exponential moving average is really a formidable resistance level. That's number one. Number two is when, in my work, when you have a fourth highest peak, let me just get rid of that. I had it in this down arrow. We don't want to just yet. It might turn out to be a down arrow. Right. What we're looking at is in the daily chart, we made that fourth highest peak way back on April the 14th. And that was a D, and that D took you down from the 54.56 level on the 12th of April down to the low of 44.10 on the 5th of May.
It was a quick downturn, it was.
Yeah, I mean, percentage-wise, that's pretty good, 10%.
Sure.
So what we're looking at is that the retracement, in my work, if you go to a retracement and you fail at a D, way below the previous high, that's not a good sign. I'll have to see the next C or D way above the previous high. Then you're taking on new altitude. You've got the upside resistance is opened up. And at this point, I'm looking at it, and I would not be surprised if crude oil actually pulls back a little bit from here. And in the larger scheme of things, when we're looking at, let me take this away, and you'll see that the monthly chart is suggesting that crude oil has very limited upside. It might also have very limited downside. It's kind of trapped between the 55s and the 45s of this particular 14. Let me put that in there correctly.
Sure,
yeah,
that's $50, right? That sweet spot that oil's kind of found. That it seems like people, as in producers, consumers, retailers, could be happy at that price level, and it seems just to be oscillating right around it.
Absolutely. And then, as discussed over the last couple of days, I've been saying that the competition for energy sources and resources is so great that we might find that oil becomes fossilized once again in the next 10, 15, 20 years because there are so many alternative sources of energy.
Sure. And I was just listening to an interview as I was coming in here on Bloomberg. They were just talking about how the technology field in oil, as in getting it out of the ground, the technology that's allowing them to get oil reserves that they weren't able to access out of the ground, maybe just to get it out at an economically feasible price, is really almost moving as fast as technology itself. And the person that they were interviewing was saying, Moore's Law, which I believe is in technology, where it's, multiplying by 10 every 10 years. Is that what it is? It's something like that, just an amazing growth. And they were arguing that there's similar properties right now within just oil and exploration and energy exploration, bringing that supply online with new technology. And maybe that could see, the price of oil facing some serious pressure to the downside with all of that coming on, and what you're kind of talking about, where other, it's not being used. The demand is falling off at the same time, right? There's natural gas you can use. There's other forms of energy that are taking its role.
And also, a lot of the millennials are deciding not to buy cars, even though we're looking at last year 17 million vehicles. I think that's changing. And not only that, you've got Uber and Lyft.
I would agree. You do not need a car. When you think about how much money you spend on a car, and then you think about the percentage of each day that the car sits there doing nothing, right? And that's what's really that when you and that's where the Uber and that whole industry, where it's making use of those vehicles that are not being used 24 hours a day or however. When you look at
which will create its own problem later on, but then we'll have to deal with that when it comes.
No, they could be far-reaching, though. I agree. I'm in a lease right now myself, and that expires in 2 years, so I'm 1 year into it, and I've already found myself thinking, it's probably not going to make sense to be in a lease after that period of time, because 2 years from now, there's going to be amazing electric vehicles maybe, or just the ride sharing is really picking up, or however that works, where I think I'm going to have to reconsider. And, I don't think I'd want to be in another lease at that time, because that's going to put me 5 years into the future. And it's almost unfathomable to think where we could be in terms of ride sharing, electric vehicles within 5 years, right?
Absolutely.
Right. Okay, folks, come on back. Basil Chapman, Tommy O'Brien, we're covering for Larry Pesavento. Trade what you see. We'll come on back. We'll take a look at some natural gas. We have EIA numbers at 10:30 today, and see what's happening as we come into the open for the market.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, I'm in here, and you know what I'm doing as well. Let me just finish up sending off one email. We have a lot going on this morning at TFNN. I'm multitasking, making sure we're covering for Larry. So, Basil, what are we looking at this morning?
So you mentioned natural gas. I've got United States Natural Gas Fund out, which is really interesting. We were just talking about oil. You have the same kind of chart pattern in the gas, in the monthly chart. See this H pattern, except that it has not yet retested the low. So this is going to be a very important moment for natural gas. Now, I talk about peak Ds, the fourth highest peak. It's very unusual in this short period of time, taking it from the low of, if I can just find that right there, the low of March of last year till now, to come off a major bottom. I'm showing this chart. On the right here is the monthly chart. I'm extending it out. Look at this chart. This goes all the way to July of 2008 at $511.12.
Pretty remarkable, I know, right?
Trading now at 743. Of course, it's an ETF, and it gets reconfigured, etc. But you'll see these H patterns that turn into lowercase m. It did that from 2012 into where it broke down, and just going into 2015. I think that's December. Yep, December, and then January it broke the left side low, and now we're doing the same thing again. And that's suggesting to me here as well there's a plethora of gas, natural gas. But what will be very interesting is if they start to use some kind of gas in maybe whatever vehicles it is, whatever it takes, it's going to have to really push into the tens before it breaks out and becomes viable as a trading vehicle on the longer term. At this point, I think of it more as a short-term up and down pattern, and you can see the same thing in the weekly chart. You've got this large arch formation, comes back down, doesn't break the low of 578 that was made back in 2016. The low was made just in March of this year at 648, having gone all the way to nearly 10, and now it's kind of stuck in this lower range. So now you're talking about using Nadix platform to trade a very quick trade. So that's something completely different.
Sure, and I'll just jump in here. So that's where, so we got the commodity spreads we're looking at, and I'm jumping over to natural gas. So I'm going to jump into 11 a.m. first. So it looks like the contract right now we're looking at is trading at 331.57, call it the July contract. And so what I'm doing, Basil, I'm jumping first to the 11 a.m. spreads, and it looks like we have 315 to 335 or 325 to 345 or 335 to 355, as in would really be looking for spreads maybe with a ceiling and a floor at 330 if the market's right at 331. You know, maybe trying to trade these both directionally if we wanted to.
Can I just ask you a quick question as you're looking at that?
Go for it.
What's the relationship of oil to natural gas? I notice that sometimes they trade opposite, very short term. Sometimes they trade together.
I don't understand the fundamentals well enough to know if those trade together or if, they counteract each other. I'm not sure.
There was an initial spike this morning about 30 minutes ago where natural gas went from the 331 area to, I've got it trading at 334. I'm probably
yes, and I just pulled up a chart, the same thing that we're looking at. And then it's been quite a quick downfall, right, from that same 335 down back down to 331.
Okay, I haven't got that far yet.
Okay.
I'm behind, which is a little bit, it's fun because I'll be behind and I'll have to make.
So what you'll see, the 915 bar, we opened at 334.4. And that bar closed at 332.2. So, I mean, that's a two-penny, pretty huge pullback within that 915 bar. And then the next bar, and we're in right now, is the 320 bar. And that one has already traded as low as 330.57. So pulled back almost right to the bottom of that range where it was at about 8 o'clock this morning. And you know what? Maybe it is trading off some of that oil volatility as well because, you do have an OPEC deal right now. And if that's going to affect the price of oil, maybe that's so forth going to affect the price of natural gas or the demand of how those two interact. We have a caller. Let's go to William in Singapore. William, good morning.
Hi. Good morning. Good morning, Tommy, and good morning, Basil.
Hi.
I like to ask, your views about, Wynn, the Wynn Resort, as well as NVIDIA.
Okay, Wynn and NVIDIA. And we're, of course, we're all familiar with both of those. Basil, do you want to dive into one of these first? Any one of those that you like looking at?
So I'm looking at Wynn right now. This is a stock that made a peak E in the Chapman wave back in when was that? 2014. I remember it well. It was March of 2000. It went to 248.31. I picked it up just afterwards as a chart pattern, and it made the little H and it came tumbling down and hit 49 back in January of last year. Now what it's done is it's run up in that leg D that I keep talking about. In the Chapman wave methodology, it's made the oval pattern as a pattern I call the stalk leg formation. And what's very interesting is that the weekly chart is in leg E. I'm looking at this and I'm thinking it's getting a little choppy. Now, it's made an oval pattern within the context of the daily, and that says to me, so this will have to be C. I think you'd have one little pop to the upside above 129.03. Whoa, that's a lot. What position do you have right now, or are you just looking at it?
Oh, I'm looking at it. I don't have any position right now. It's just that I remember I read somewhere they say that one research company has upgraded them to with a target of about 144.45.
Okay.
So if we are buying options with $20 upside, which can be quite a good returns for the options.
Yes. But you'd be looking at, you'd go out to what, July or August? What would you be looking out to?
Yeah, probably July and August, because we are not sure whether how far or how fast it will go up.
So if you are going to do this, I'm going to suggest something. It could be wrong. I'm going to suggest that you wait a couple of days before you think about it, even though if you're looking at an option that far out, 3 or 4 points in the stock is really not going to make all that much difference, because you're looking at a much bigger potential. So I'm going to say to you, if you can just hold off a little bit, it's between 127 and 122 or 123. That's where I would be looking to start the move. And if Wynn trading at 124.60 right now, it's up 60 cents pre-market. If it shows strength, then I would say to you, you know what, you've got a little time, Wait for the next big pullback. I think it's coming. I actually have a target on the shorter intermediate term of when coming back to test the 118 level within the next 3 to 4 weeks. But it could go a little higher before that. So I'm just saying to you, if you're looking at that long and we're at the highs of, this is in fact a 2015. Yeah, you're going back, we're 17. It's a 3-year high that we're looking at right now. I'm just going to say, I don't think you need to rush to get into it, but I'll tell you what you might want to do. You could actually start off here with maybe just a very small position, and that's like the feeler position, and then I would add to it on those levels that I'm talking about. So that's what I'm saying.
Because last week I just pulled up the chart as well. It was down to 116, only talking about 7 or 8 days ago, right? Which is pretty intense that it pulled back that quickly. Well, hang with us, William, if you can. We'll come back. We'll take a look at NVIDIA, okay?
I'll hang on. No problem. I'll wait.
Okay, perfect. Thanks so much. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. We have the markets futures relatively higher as we open right now, and we're on the phone with William from Singapore, and we're looking at NVIDIA. So this is, well, William, are you just looking to get into this? Have you been hearing about upgrades, just bullish kind of the sector? They came out with their earnings, what was it, May, just recently, right? May, at the beginning of this month, and they beat with they were trading at only about 100. Let me just drill this down even a little bit.
May the 10th.
Yes,
May
correct.
the 10th. And
May the 10th. So they were trading down at about 100.
There was a downgrade.
Sorry, say that again, William?
At the beginning, there was a downgrade. I think some analysts say that it's only worth, between $70 to $80. So I actually, have a position at that point in time, and I bought, when it was at around $100.
Okay.
And it went to 108. I was pretty happy, and then suddenly that news broke out, and that is where the stock started to, so-called move down pretty fast. And now it has come back up, and I think the latest news was SoftBank is taking about 4 billion stake in NVIDIA.
Okay.
That's what I just read. So I was just thinking, with this, is it the before, this news came out, was it that, some probably, insider already got hold of the news, and that's why the share price has already gone up, or it hasn't reflected this, stakes that's going to be taken by SoftBank?
Okay. Yeah, I mean, of course, any type of investment to that magnitude would have an effect. It's just been quite a run.
Yes.
To be, in my opinion, trying to get in there, only because I would fear, just a normal retracement, just like happened previously, right? In terms of just going from 100 to 140 in the span of less than a month after a rise of going from 40 up to 100. It could face some volatility when it's that high. Because they did great on earnings, but to be up 40% from where they were, a month ago is pretty remarkable. Basil, what are you looking at for the Chapman wave for NVIDIA?
So NVIDIA, once it broke out, once it started that really big move, it really took out every level of resistance from the 120.92 high from February of this year. So now what I'm looking at is really at a high-level consolidation. The way I'm looking at it is that by any measure, I think it's overbought right now, and that at 139, I have a target of the 133 to 129 area over the next 2 to 3 weeks as a test of strength. It could go a little high. I don't think it'll go much higher. It could go a little higher, but everything about it says that there was follow-through to the upside after the earnings. That's always very good for a stock, and now it's in an area that it really needs to digest these big gains. So it's had two gaps. I think that at the moment that it takes out 135.22 as the gap up that was on the 19th, once it takes that out, then it starts to test the 9-period moving average, and I think it's going to digest the gains. But I think as a stock looking out, I think this is I was mistaken. I thought it was going to be a longer timeout when it had made that peak, what I call a peak E in the monthly chart back in February. It did take 2 months, but then this third month it just broke out. It is a leader in the category, so I'm looking at it as a very positive stock. Just shorter term, however I want to measure it, it's just overbought. And I just wanted to go back to your win, just to give you a little bit of an idea of what I'm looking. I had time during the break to do some work on the daily, and the daily suggests to me, let me just move this over right here. The daily suggests that it is also in this chop, chop, chop sideways range. I reconfigured the notation in the Chapman wave, what I call an instant restart back in that move back on the 27th of March. I'm very comfortable with this. I call it a flat base restart. And that suggests that if it takes out the low of 120.52, that's the low of the 18th of May, there's a good chance that it's just going to make lower lows and lower highs for a few weeks while it digests these gains. And that says to me that you will have a much better opportunity in terms of the option by getting a better price if it was a little lower down. But as I say, if you want to start, it's always find if you want to really get into the longer term, on a short-term basis, you can either buy just a handful of shares, or in your case, maybe buy one option. Get a feel for how your options actually, the premium is shrinking or increasing based on its action. And that's going to tell you a lot about what's going to happen in the future. That's just an idea.
Okay. Because I was thinking that, Win has exposure in Macau. And I heard from friends, from Hong Kong that, the high rollers probably has already come back, to Macau, so that might help,
it will help.
Win
That's what you
in the
need,
future.
right?
Yes. So
looking out, William.
Yes.
I just want to say, looking at the monthly chart is still very strong technically. That's the reason why I'm saying it's just a matter of where you place your entry point on your option.
Sure.
But I do agree that it looks to me going out a few months, it's going to go higher.
So in that case, I would just wait for it to pull back and then probably, create a structure a longer term, maybe August or September win, for it to wait for it to move up. Am I correct to say that?
Yeah,
Okay.
I think that makes sense.
And you know what? Just jumping around one more time before we let you go, William, back to NVIDIA, right? It had huge volume, of course. I was just looking on May 10th, of course, the day following the news. May 11th even coming in, so it was like 53 million on the 10th, 48 million on the 11th for follow-through, all the way up to about 130, right? But then as you've been up here, even that recent high was made on 28 million. I mean, the last 2 days was 17 million. Day before that was 20 million. Yesterday was only 20 million. So just in the same degree for NVIDIA, right? Maybe that's just running out of steam a little bit and could pull back a little after that type of a run. Just something to think about for sure.
Okay. Toby, could I ask you that, how do you read whether this SoftBank in news has already been factored in? Is there a way that we can, read that?
Well, everything shows up there in terms of buying and selling and demand and supply in the volume numbers, and you see when news breaks that the market really, really reacts on, like their earnings, right? Volume came in, and that hasn't come in to that degree. And I don't know when that announcement was made exactly, but if it was earth-shattering, you would have seen the volume and you would have seen that same type of acceleration if it had that type of an effect, right?
I saw that the news came in, I think, yesterday.
Okay.
Yes, that's why I was quite puzzled that it came in yesterday after the market closed. Then, logically, today might have some impact on it.
Yeah, we're trading right now. It looks like 139.40. It doesn't look like it had a huge effect in terms of just looking at the chart and the volume.
Yes.
But that doesn't mean maybe that's what's actually just keeping it up at this level, and maybe you would have a little bit of a decline if not, but
okay.
Yeah.
Okay. In that case, I'll just hold back and wait and see. Thank you very much, Tommy, and
William,
you very much.
thank you for calling, man.
Thank you.
Have a great day. Gotta love it. William calling from Singapore, all over the world. We got world markets moving, of course. And I hear the music. What a lovely timing.
That's the chart of the E-mini, so we should talk about that as soon as we get back.
E-minis, I like it. Let's see what's going on. We got the VIX. Let's see where the VIX is. Is the VIX still under $10?
VIX is 10.09.
10.09. All right, we're right around that number. Come on back, folks. We'll take a look at that the ES Mini, and we'll see what kind of action we have going on.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Tommy O'Brien, Basil Chapman, covering for Larry Pesavento. Trade what you see. Larry is traveling for today. And I just want to make a note for all of you out there that might be listening, that are trying to get into the Tiger's Den. We've been having some problems yesterday, and we're still battling. And the people of HotCom are doing a great job. They're working on it. We hope to get it fixed today. But we'll send out an email, and we hope to get that fixed soon. So, Basil, ES Mini, what do we have going on as the market opens here? Up slightly.
Yep, the June E-mini is trading at 570, up 570. Well, as I'm talking, it goes from 575 to $6 at 24.08. In my work, it's in the 120-minute chart, it made the sixth highest peak, which is at peak C. You can see that peak D, the fourth highest peak, had quite a bit of a pullback in time and in price, but then it snuck to a higher high at about 1 o'clock, about between 1 and 2 this morning Eastern time. Made a little doji candle, and it pulled back quite sharply from the high of 2412.50. Made a low at 420 this morning at 2405.50, and then it made that arch formation that I always like to talk about. And the lowercase arch goes from a lowercase h to a lowercase m, and that's where we are right now. You saw this huge volume at the open this morning. Look at that massive volume. So sometimes from that massive volume, there's a little digestive phases, like people who have shorts have to cover, longs think, oh, this is great, we're going to skyrocket to new highs. But in fact, what happens is it's the period afterwards. Larry always calls the first hour amateur hour. I think things have changed quite a bit. I wouldn't really call it amateur hour. There are a lot of people that have fabulous programs that actually treat the gaps or the opening gap and all that. But he's absolutely right. This is where some positions are taken that you shouldn't take, because you should wait for some digestive phase, and that's really where we're at right now. So I'm looking at this and I'm making it real clear. If there's a close at any point today above 24 on the, this is the 10-minute bar. If on this 10-minute bar there's a close above 2410.50 and it holds above there and it closes above there for 2 out of 3 bars, so that's for a 30-minute, a consecutive 10-minute, 3 consecutive 10-minute bars. That's going to be very positive, and that's going to say, you know what, new buying is coming in, and now we've got to look for a retest of the high of 2412.50. Conversely, if there is a close on any 10-minute bar, it just has to be one close, doesn't have to be more than one, in the 2404 area, and we're at 2408 right now, that's suggesting that all of the noise that we saw from the gap up at, what was that, 21 from 9:30 last night, that must have been where some of the markets opened overseas. That means that was all noise, and now the real market's starting. What happens after that? So those are the parameters I'd be looking at in the E-mini.
And we had, well, I was just, as you're talking about that, we had the initial jobless claims come out at 8:30 in the morning, and that was, I believe, like 240,000, pretty strong for the economy, and just didn't affect the market much, as in it was already up slightly at that point, and it just kind of stayed status quo, accepting that news and moving forward, as the market has been on a pretty regular basis.
So on your status quo, that's really very good. That's just a great summation. 2 words. and it really sums things up very well. And I'll tell you why. Because when the market becomes ho-hum, kind of bored, because now you remember what it was when there was a 240 number, 240,000 number before, the market either loved it or hated it because it was to do with rates.
It was oh great, the economy's doing well, and then oh no, that means rates are going to go up and the economy's going to suffer, and round and round.
And now the market is saying, you know what, we're kind of done with that. We're kind of bored with that. Now we've got to look for other things, and that's really what it's saying. So here I'm showing you in the 2-minute E-mini chart, there were four peaks to the upside to 5:30 this morning. A long decline in an arch formation held above the previous low that was made at 4:30, and now is trying to challenge this second peak A, peak B, peak C, peak D in the 2-minute chart, and this is a very important phase right now in the market for a number of reasons. I'm also looking at the Dow in terms of the 120-minute chart, if I can get there right now, because a push above 21,070 that starts to hold says watch out, because it could be even higher highs to come. It depends on how the market handles the period between 10 minutes past 10 is when you're doing a show with your father.
For sure.
And I'm looking at this and I'm saying, okay, this is still leg F to the upside in the 120-minute chart, and it's Chapman Wave 5. Let's see what happens after that. But I do have to say that extra boost yesterday was a bit of a surprise to me in the afternoon. There was the Fed discussed the way they're going to try to contract the selling of
the Fed minutes, of course, saying that they're going to scale down that balance sheet for sure.
Right, and that says that the market might, in the next few days, might have to deal with something a little different, and we'll see how that plays out. But what might happen is that now there'll be a new focus, because if the Fed came and pumped money via whatever sources they had between 10:30 and 11:30, if that's been their tradition, how are they going to continue that? I mean, are you pumping money in one way, but you're scaling back the bonds? Are you buying them back? Is that where the money?
Sure, as in the influences still remain, right? Possibly, at least. Or
Correct.
Will they, or how will they remain? No.
Is that going to change, or is it going to stay status quo, as you said? Yeah.
So this morning we had Best Buy come out with earnings. Have you taken a look at Best Buy yet? Pretty interesting in terms of showing 1.5 to 2.5% same-store growth, which, of course, in the retail world is gangbusters beating. They expected about an even number, and it's remarkable. Best Buy, they've gone through some turbulent times, but they've done a good job of turning themselves around, and it looks like they've kind of positioned themselves, maybe if some of those other retailers fall off, that they could capitalize. And, I was hearing the story this morning, of course, and we've all probably been in a Best Buy or at least been by one. And, they're not in the same manner as some of the retailers where you're stuck in the brick and mortar malls, where maybe as Macy's departs and JCPenney's struggles, you're going to see foot traffic struggle. They're usually in their own stores. That maybe that's helping them out, where they're still a destination upon themselves. Within larger malls, of course, but not quite the same way that some stores are tied to those larger retailers.
So this is very interesting, because I had a caller, I would put it maybe 6 months ago, and someone sent me an email asking me during my show, what about BBBY? That's Bed Bath and Beyond.
Sure.
And what I said is, I don't see very much here. There's so much competition. But if you're kind of looking at those areas, it seems to me BBY, take away one of those B's and you've got BBY, which is Best Buy. It seems to me that this is the store that people want to go to. I know I go to it when I'm thinking about an electronic, whatever it is. That's kind of where I'll go just to check it out. And
sure.
In fact, just recently we bought a computer through them, because it really was the Best Buy at the time.
It's remarkable. They do really they compete on price, and they kind of realized that they had to, right? And I pulled up the chart, even looking into late 2012, December 2012, they're at $11, and they're back up to 56 at this point. But that's where they were struggling, and that everyone was using them as a showroom. and buying the product off of Walmart or Amazon, and they realized they had to compete on some of those levels. I've bought in TVs. I've done the same thing. Interesting turnaround. We'll see how they trade from here. All right, folks, come on back. We got one more segment. Basil Chapman, Tommy O'Brien. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. And real quick, Basil, we just heard that ad for your awesome newsletter, Opening Call. If people want to check it out, you can just go to the right front page, TFNN Newsletters, click on Trading Newsletters, Opening Call, and you can get in there with a 30-day free trial. Be in there with Basil every morning, seeing his charts every morning. So, Basil, I just wanted to jump around one final thing. We're always talking about gold. We have plenty of gold listeners. What are you thinking of the gold action? You know, 1256. We've had some volatility recently. Kind of, I think we're up like $3. Yeah, gold contract up about $3 today. What are you looking at when it comes to gold and those precious metals?
So this is very interesting. Gold will change its character. This is the continuous contract. If the contract itself can trade above, I would like to see a close, not just a spike and close, because we've seen a number of these patterns where they pop to a new recovery high and fail.
Sure.
If gold can close above 1265 is the level to look at.
Okay.
But I would like to see a close between 1267 and 1271. If that occurs, that weekly chart just starts to improve so much. So that's all I'm looking for. But in the meantime, I think it's just chop, chop, chop in a kind of a sideways move, just a little longer. But the parameters watch will be that 1260, 1267-ish. on the upside, and on the downside, if it takes that 1247.60 is the level to look at. But I would give it a little room, a close below 1245, and then it's probably going to go a little lower. I think it's making a base, and that's really important. And the surprises will be the pop to the upside. But just on a short-term basis, it's in a fairly narrow trading range.
It's pretty remarkable when you look. We were April 16th. We were up at almost about 1,300. Fast forward to May 9th, we're down to 1216, and now we're $40 up from 1256 from that level. Same deal when you look at the volatility of these commodities, whether it's gold, oil, percentage-wise, just huge swings on commodities.
Stuck in a range. And if you look at the TLT, this is bonds, it's the same thing. Bonds are trading at 123.07 on the TLT. It's had the move, and it's in a trading band. And we need to see, say, the TLT go to 126s, that's a breakout up, and 190s is a breakdown.
Awesome. Okay, that was a quick hour. Basil, thanks for joining me so much, and we look forward to the program at 11 o'clock in an hour.
Thank you very much, Tommy. Always
My
good
pleasure.
to be with you.
My pleasure, always. Stay tuned, folks. We got my dad coming in here for his 10 a.m. 5-minute update. He'll be right in there, and then I'll be back here joining him for the 10 o'clock hour. Stay tuned for a great day of programming at TFNN.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.